Hello and welcome to the Real Estate Macro Podcast. My guest today is my good friend, Mark Gross. Mark, welcome to the call.
Thank you, Douglas. I really appreciate it.
And Mark, for those who don't know you, can you tell us a little bit about how you got here?
Sure. Well, what I do is what's called cost segregation. That's accelerated depreciation on properties, and that helps owners of commercial real estate reduce or eliminate their federal tax liability. I've been doing that with CSSI. We're the largest cost seg company in the country. And over the last 20 years, we've done tens of thousands of studies, and I've been with them about 13 years, and I work on projects nationwide.
And Mark, before you got into that business, how did you get your start career-wise?
Well, I have a business degree, and I worked in corporate America for a number of years. I worked for some large manufacturing companies. I oversaw a lot of supply chain activities, such as production, inventory control, traffic, things of that nature. The last plant I worked at, we had a 1 million square foot plant. And so I oversaw a lot of those activities, had a lot of fun, but I got tired of laying off people when different corporate ownerships would change. And so just kind of got tired of the corporate rat race and decided I want to do something different.
And what caught your eye about cost segregation? That seems like it was kind of, I got to say, it was kind of a niche to me. I really wasn't, I took tax law in law school even, and I was like, cost segregation, that's an interesting niche. How did you find the cost segregation space?
Well, I was initially drawn to real estate. I've been interested in real estate ever since I was in my 20s. I, bought some investment. By default, I owned some property, and then I bought it, had a new house built, and then I leased out my old property, and things of that nature. So I always had an interest in real estate, but then I became familiar with commercial real estate brokerage, and I still do some of that on the side too, because a lot of my clients are looking for those financing for hairy deals, not your traditional ones. So I've done a lot of underwriting for that type of thing. And then I got introduced to cost segregation. I thought, wow, this is really a cool thing. Great way to be able to, help people save money. And I like that aspect of it.
In market, it's really interesting. I don't know that how familiar people are with the history of cost segregation. When did it really storm onto the scene? Because it feels like it was like the early to mid 90s when it started to really take hold. I really didn't really notice it until maybe 05, 06 when I first heard about cost segregation or something like that.
Yeah, it's been around for a number of years, and there's been different iterations of it over the years. What kind of put it on steroids for us is that there was something in the end of 2017 called the Tax Cuts and Jobs Act. And what that did was allow people for new acquisitions to be able to do what's called bonus depreciation. So what that does is able to take a look at anything which has a less than 20-year life and depreciate that 100% in the first year of ownership. And that's really huge. So for instance, you have your carpeting, which would be considered to be 5-year property, your parking lot, which would be 15-year property, and a lot of other componentry within the property that you can depreciate, right away. So that's been huge.
And I guess we should back up a little bit and kind of compare and contrast what the traditional way of depreciation is. So people playing along at home may or may not be familiar with depreciation generally. Mark, can you tell us a little bit about the normal depreciation rules, and so we can contrast and explain exactly how powerful cost seg is?
Sure. Yeah, that's a great question. When you take a look at your most property types, you have a 39-year straight line depreciation. So you take a look at the acquisition cost. You have to subtract the land from that because you can't depreciate the land. And then for the balance, you do a straight line depreciation over the 39 years. Now that's different for residential properties that has 27.5-year straight line depreciation. So that's the difference between the two, but the same rules apply as far as bonus depreciation and things of that nature.
And then so the power, I guess to describe the difference with the old way, you do 39 years, everything in the building. So the building, the light fixtures, the mechanics, the mechanical system, all over 39 years. So cost Segregation's pretty cool because guess what? What did we do, Mark? We started breaking down the light fixtures and doing a study on different and putting them on a different depreciation class, right?
Yeah, that's correct. Yeah, what we do is, because of the tens of thousands of studies that we've done, we're able to, with a simple questionnaire, be able to provide a free preliminary analysis of an estimate of what the client's going to save as far as taxes. So we ask questions about the property, such as square footage and number of units if it's multifamily, things of that nature, and also what their estimated federal tax rate is, because the savings is going to be different or higher, let's say, for someone in a 37% tax bracket as opposed to someone in 22. So, and then we also do additional analysis for CapEx renovations. And like a couple that I'm working on right now in Tennessee, they're acquiring them this year, but they're going to have a pretty extensive CapEx of hundreds of thousands of dollars this year and then next year. And we do additional analysis on that to be able to save them, not just on the initial acquisition, but also on the renovation analysis.
And that's interesting, Mark. So I didn't understand that piece of the puzzle. So you can come in and say you've already had the building for a number of years on a normal schedule. You can come in with and actually apply cost seg to the rehab.
Yes, you can do that for the rehab, and when we do that, but for the most part, it typically occurs when someone buys a new product.
Buys a new property. That's more my understanding. Yeah, I think if you're kind of on a depreciation schedule already, it makes it hard to switch. But
yeah, another point to make is that some people ask, well, how many times can you do cost seg on the same building? Well, it's only once for the same owner. But let's say a new owner acquires it down the road. The clock starts all over again, and you can do the same. You can do cost seg for the new owner as well.
Yeah, and that's the real interesting piece of it. You can really get in there and make a huge difference. Mark, can we talk a little bit just to make sure people understand, when are cases when you actually shouldn't do cost seg? Can you think of cases where you should it's probably not worth doing, or you shouldn't go that way?
Sure. One of the pre-qualifying questions that we ask is, what's your hold period going to be? Are you planning on keeping the property for 5 years? What we found is that there's something called a recapture tax. So if someone plans on flipping it within a year or two, we advise them that's not something they probably want to do. If they're planning on keeping it for at least 3 to 5 years or longer, then it probably makes sense. And the other pre-qualifying question on that would be is, what's the size of the property? And we have a pretty low threshold on that. Actually, we've been able to make our studies quite cost effective, and we can go down to about $250,000 or greater, excluding the land value. So that works out well in some areas for single family homes, for short-term or long-term rentals and things of that nature. Because for the most part, your commercial properties are going to be larger than that.
Absolutely. And Mark, when you're in the field and you're looking, are there different? This kind of tripped me out. I'd like to talk a little bit about the differences. Like car washes are on a 15-year. Car wash, gas station, I understand, are all on a 15-year schedule. And even though they're on a different schedule, that way you can still, on top of that, do a cost segregation study.
Well, the standard answer is it depends. And there's a lot of different criteria with that. I get asked that question frequently for gas stations. And what I do is I send the clients a PDF from the IRS, which explains what it is for gas stations particularly. Frequently, you have a gas station that might have a C-store, might have a car wash associated with it. But the rules are, if you have at least 51% or more of your revenue, which comes from petroleum, then you actually don't have to do a cost segregation. I've had some clients approach me. I'd like to have a study done on this, and I ask them those questions. And I'm like, yes, there's no point in doing a study. You can actually take advantage of that without that. So the standard answer is it kind of depends. There's a lot of differences in that, and that actually also comes into play when it has to do with investors. Let's say you have a syndicator, and sometimes I think that maybe not intentionally, but syndicators might oversell what the benefits are for their passive investors. And there's different rules about that, as far as when you typically have a passive investor, you can take the passive gains against your passive losses. But however, there's exceptions to that, maybe of a spouse who's a real estate professional. If that's the case, then that's kind of the holy grail as far as what you can do as far as depreciation. So I really defer people back to their tax counsel who have a better understanding about what their unique circumstances are and what they can or cannot, use the deductions.
And Mark, you said one of the favorite two words in all of the tax code for me: real estate professional or professional. I guess it's three. I guess I'm not counting very well. It's early, not enough coffee yet. But essentially, can we talk a little bit about your general understanding of like how do you and let's say here's a case study. You're a physician and you're making a good, like, really high salary. Ordinarily, you're not, absolutely cannot take these depreciation gains. You've done a great cost segregation study on your commercial property. You cannot offset them against your ordinary income, correct?
Yes.
And so okay, let's say you have a spouse that could say, I don't know, maybe get a real estate license and I don't know, maybe go out and meet new friends in real estate and have fun in the real estate business, qualifying as a tax professional. Yes,
that's correct. In fact, I'll give you a scenario that I'm actually working on right now. There's a surgeon that I'm doing a portfolio of his properties, and he's a high W-2. He has a spouse. His wife is a real estate professional. So the losses that we're going to be able to have for his properties are not only going to be able to offset whatever income there is on those properties and other properties he owns, but also against his W-2. But if you claim to be a real estate professional, you better have the documentation to be able to support that. You not only have to work, over 1,000 hours a year in that industry, you need to, materially participate in that type of activity, but you really need to keep a logbook too.
Yes.
As far as just these are the number of hours that I have and things of that nature. I mean, we heard of a situation where someone who had a W-2 who also claimed to be a real estate professional. Well, that's a real red flag to get audited by the IRS, and the IRS brought him in and said, we noticed that in your logbook here that you filled out the same number of hours in the same pen throughout the entire year. What are the odds? What are the odds of that? So it looks like you just kind of filled this out at the 11th hour. So it's a great thing to take advantage of if you actually do. If you're able to qualify for it, but otherwise don't do it.
What do you think? Thoughts on the Google Calendar, even making sure you keep rigorous notes about your Google Calendar, who you met with and how long and stuff like that, even?
Yeah, it could be paper or electronic, sure. But you need to, the key thing is to document.
And the main thing is to understand the IRS understandably hates this because you are going passive income, passive losses against active income. They know like you, so you better be ready to fight if they decide to fight you on it.
Yeah, it brings up an interesting thing as far as IRS audits. Of the tens of thousands of studies that we've done, we've never had a study overturned by the IRS. We've never had a study trigger an audit. We've had some clients that have been audited for other reasons. But we will, at no cost, and it could cost as many thousands of dollars, defend that study in the event that a client ever does get audited. And we've never had a study overturned. And the reason why is if you do everything by the book and the IRS guidelines, you're not going to have an issue. And we want our clients to be able to sleep well at night, knowing that they're not going to have a problem with it.
And that's the benefit of your years and years and years and years of experience. You've been there, done that, and there's certainty in what you're doing. And that's the beauty of working with you, Mark, is that they can rest easy at night knowing, hey, if there ever became an issue, Mark's been there and done that, nailed it shut. So come on, Mr. Taxman, if you want to box, we can box.
Yeah, and it's not necessarily me. I mean, we have a very large corporate staff. We have engineers and a lot of MBAs and others there and CPAs who support that effort. And just to kind of get into the weeds a little bit here, as far as the study itself, it's not a simple process. It takes about 6 to 8 weeks to actually do it. Mm-hmm. We will 100% of the time do a site visit for every single property. Not everybody does that. we know that by doing that, we're not only going to be able to successfully defend any audits, but also we're going to be able to provide the maximum amount of depreciation by actually being there, taking photographs of everything, and then over a period of time of 6 to 8 weeks, the engineers are going to review all the documentation from the photographs, from the blueprints, appraisal, all the different documents to be able to do the study.
And Mark, I guess I'm fascinated when in this process, how does the I guess I'm trying to get at the question of how does the if they were able to, if the IRS had a problem or anything, how would they go about like raising a fit? Would they just say, you know, hey, we don't like this, and you know, please provide documentation on how you got here?
Yeah, like I said, we've never had a client's study. None of our studies have triggered an audit. However, some of our clients have been in there for audit for other purposes,
other reasons.
And in that particular scenario, what we've done is be able to provide all the documentation. Yeah. And when you come in with mountains full of documentation, all sorts of photographs and details and everything, and with the fact that we've been doing this for 20 years, we have a successful track record, we're going to be able to blow away, you know, any concerns they might have, because, you know, again, we've done things correctly.
Well, and that's the great point about it. You come in with a binder with the site visit and the laundry list of how you got there. They really, on that particular point, I can't see how they'd have any argument whatsoever.
Yeah, they don't.
Yeah, I guess I was thinking of audited for other reasons. I heard about this case where a guy was buying a business, and one of the line items for one of his expenses was mistress. So that guy might be getting audited. I don't know. But that's neither here nor there. I just thought that was hilarious. Mark, if people want to reach out to you, how do they get a hold of you?
Well, I'm pretty active on LinkedIn. So that's one way. I can also, my email address is Mark Gross at costsegregationservices.com, and also by phone.
And guys, that contact information will absolutely be in the chat for you here to get a hold of Mark. And now that we've done the work, we're going to talk about something fun. Mark, when you were in Hawaii doing your cost segregations, by any chance were you able to make it out on the golf course?
Actually, Douglas, that's not a site visit that I did myself.
Oh man, doggone it! I was hoping you got a chance to play Kapalua or something cool like that.
Yeah, it's typically not cost effective for me to do the site visits myself. If it happens to be local, then I'll do it. We have boots on the ground throughout the country to be able to go out and do the site visits. But I'll give you an example of one that I did do here about a year or two ago. It was in the middle of the COVID situation, and I was going stir crazy because I kind of wanted to get out of town, and I had a large portfolio of about $10 general stores that were down in Kentucky and Tennessee. So it's like, heck, I'm just going to go down there and do those myself. I don't have to, but you know, get me out of the house for a couple of days. So I was there and back within 48 hours, which was pretty quick. But again, it was something that was worthwhile. And I'll tell you another interesting thing about that particular one. The client came to me and said his CPA recommended just doing a cost seg on 2 of those, and then they would extrapolate out what the results would be for the others. And I said, well, we're not the firm for you. We don't do that. 100% of the time we'll do a site visit, even though they all had about 9,500 square feet each one. And but what was interesting for him and the CPA was actually see the variation in the results of cost segregation for each property. He actually went through and did them with us. You know, one had a retaining wall, there's different sized parking lots. There's a whole lot of other variables to take into consideration. And that's one of the other reasons why we will do a site visit for everyone, because we know we get maximum depreciation.
You know, that's interesting, Mark. I guess because I see it's basically, and this is my impression, is some of the retail stuff is all copy and paste. Like Quick Trip, for example, they look like they've got Control C, Control V. They're copying and pasting as much as possible, and it makes a lot of sense for them. But I guess in this case, there were enough variations in the architecture to make a difference in the depreciation schedule.
Absolutely. So
That's incredible.
it to me, it's penny wise and dollars foolish to try
Yeah.
to save money on that, because it's not necessarily what you pay for the studies, it's what you're going to save, and then also being able to have something which you're not going to have any problems if you ever get audited.
That's incredible. And Mark, I really appreciate that point. I guess I kind of really didn't catch that before of how what an incredible, powerful aspect of every study, every single study we show up. That's incredible.
Yeah, only way we do it, and like I said, I'll turn down projects. I could bore you with other ones that
Yeah.
I've turned away just because it wasn't a fit for us.
No, no, come on, no, we're just two of them, and you're like, no, 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 that's not how we do. I love it.
Hmm.
And I'm going to go back to golf as I am wanting to do. Mark, any good golf trips coming up, or anything on your bucket list coming up?
There's a couple of industry events that are going to be here in the Chicagoland area that I might go to. As I discussed with you before, I do enjoy golfing. It's fun to get out and about. I don't have anything specific planned right now, but it's fun just to get out. And for me, it's a real clarity break, just to get out and especially being able to walk 18, just to be able to get some exercise and clear the brain a little bit and focus on that. And I enjoy that a lot.
That's awesome about it too, isn't it? Once you're out there, you kind of you focus on the next shot usually, or at least the shot before that I made was so bad or whatever. But or if you're like me, Mark, I'll hit one or two shots around that make me think I might actually be good to get the game at some point in my life.
Yeah, those are the ones that bring you back.
Yeah, exactly. And Mark, you are ICSC is in May. Am I remembering correctly?
Yes, I'll be out in Las Vegas for that one. I'll have a booth there again. Last year there was about 22,000 people at that event, which is huge.
Blows my mind.
Yeah. So like I indicated previously, I do a lot of triple net lease. So that's a great one for that because it's retail oriented for like I've done Walgreens, O'Reilly Auto Parts stores, CVS, things of that nature. But I'm also going to be doing a local Marcus and Millichap event here. Also coming up in a few weeks, a Midwest Real Estate Summit with John Kasman, and I'll be at the MFIN in Charlotte in June, and then MFIN in San Francisco area in August. So I do a number of them. Was at Salt Lake City a few weeks ago for the best
ever. Yeah. It literally it's the best ever, and because it is, it's the best ever.
They did a great job.
That's what I heard wonderful things about my friends Joe Fairless's event. That's awesome.
Yes, I had opportunity to have breakfast with him and some other people when I was there. So a lot of fun.
That's an incredible event if you're in the multifamily space, and even not. I think that's enough. There's enough other food groups that show up. It is dominated by multifamily, of course, but I know a ton of other food groups that like to go and hang out.
It is, and that's what's interesting now. There's a lot of other people, especially now. There's been with interest rates rising and everything, that people are looking at other property types, and I'm very active in multifamily, but as indicated, also do a lot with retail triple net, but hotels, self-storage. I do a number of self-storage projects, and you get huge benefits from that. Mobile home parks, industrial, you name it. Working on an industrial project up in the Northeast right now.
That's an incredible market, and again, even if you are in one dominant food group, folks. Mark Gross is your guy for any kind of commercial real estate. Can definitely recommend talking to Mark about a cost seg study. There's just so many benefits from talking to Mark. Even if you don't necessarily need it, just have the conversation, I'd say.
Yeah, and what we say is our tagline is your money, keep more of it. And what we do is we provide a free preliminary analysis. So you really have nothing to lose. If you have a question about something, let's run the numbers. If you take a look at it, there's no obligation. If you don't want to do it, that's fine.
And that's the great thing. You can dip your toe in the water to make sure it's going to be something you want to do, but cost justified almost every case if you're going to hold longer than 5 years. So everyone out there that looking for some, I don't know about you guys, but saving taxes is cool as far as I'm concerned. So definitely want to reach out to Mark. Mark, I want to thank you so much, my friend, for joining us today to talk about a little bit of an exotic topic for some, but did a fantastic job unpacking it for us. Thank you for joining us.
Well, thank you. I appreciate the opportunity. Have a great day.
All right. Talk to you soon.
Okay.